You are listening to The Vocal Technologist. Spoken Tech for your ears.
Welcome, listener. Today we're looking at some really fascinating shifts happening in financial services. We've
Yeah,
got sources covering everything from AI digging deep into banking to, well, huge changes in payments and even regulation itself.
exactly. And our goal here is really to unpack these rapid changes, maybe highlight some key innovations, and help you see how it all connects, the ripple effects for your own finances and the bigger global picture. Should be interesting.
Okay, let's start with the big one, AI in finance. It feels like it's everywhere. Even Sam Altman apparently mentioned being surprised at how fast banks jumped on generative AI. Is this real innovation, though? Or maybe banks just feeling the pressure like FOMO rather than a solid strategy? What's behind this speed?
Well, it's interesting, isn't it? It's not just the speed, it's the sheer scale. You've got giants like JP Morgan, Morgan Stanley, already embedding AI quite deeply, customer service, compliance, internal stuff too. And there was that KPMG survey suggesting what generative AI could handle maybe up to 40% of daily tasks for execs by year end. So, the drivers. I think it's the promise of efficiency, definitely personalization, and, well, staying competitive.
And we're seeing specific tools pop up now. Like sources mentioned MasterCard's AI Card Design Studio. Pretty neat, letting issuers quickly generate compliant designs. And then Ally Bank, they're building their own in-house AI platform for real-time intelligence. Why build proprietary AI, though? What's the edge there for a bank like Ally?
Going proprietary gives them crucial control over their data, security, and apparently tailoring models specifically for their customers. That's a real competitive advantage. And, this brings up a bigger point for everyone listening. What does it actually mean for, say, productivity, maybe even jobs, when an AI like Claude can apparently build a full DCF model that's a core valuation tool, right? In under 2 minutes.
Wow, under 2 minutes.
Yeah, pulling data, linking sources, even drafting memos. It's thrilling from an efficiency standpoint, but yeah, it definitely makes you think about where human skills fit in going forward.
That's a huge point. But AI isn't the only game changer here. Let's pivot a bit. Payments. The actual act of paying is transforming. Our sources flagged Brazil's PIX system. 6 billion transactions a month. That number is just staggering. What makes it so revolutionary beyond the volume? Are there downsides?
Pix is, well, it's really a showcase for public-private partnership working well. You had the central bank acting as this neutral coordinator, building a low-cost central system for instant payments. The real impact, huge boost in financial inclusion. Millions of people previously unbanked or underbanked now have access. It's reshaping how people transact immediate, almost free. Great lessons there, especially for other developing economies.
Okay, so PIX is like a deliberate design success.
Yeah.
But here in the U.S., something equally big seems to have happened, maybe almost accidentally. Congress apparently created a federal payments charter for stablecoins with the Genius Act. Basically, by defining stablecoins for tax purposes, they sort of unintentionally opened a federal regulatory door. People are calling it the biggest shift in U.S. payments in, well, a generation. A third way for regulation.
It's potentially monumental. I mean, fintechs have wanted a federal charter for decades, and now suddenly there's this parallel financial system emerging. It really messes with that traditional TAM logic, total addressable market thinking.
How so?
Because these new platforms, they don't just fight over the existing pie, they actually seem to unlock completely new users, new behaviors. A bit like those AI tools we were just talking about. The question is, though, could this new regulatory path be the template for future digital finance? Or does it risk just, breaking things up too much, fragmenting the system?
Right, lots of potential paths there. So bringing it back to the listener, what does all this mean for you, for the average person, and maybe the wider fintech scene? We see things like Samsung Wallet, adding in-store installment payments, letting you split purchases using your existing credit.
Yeah, more flexibility there.
And over in the UK, this AI money app, Clio, seems to be doing really well helping Gen Z users, maybe hitting for an IPO after hitting, what, $250 million in annual recurring revenue.
That's impressive growth. But it's not all positive news in this ecosystem, is it? We also have average U.S. credit card rates hitting historic highs over 21% now. Took just 3.5 years to get there.
Ouch. That's steep.
It is. And then there's this tension around data access. A fintech group is sounding the alarm about data monopolization by big banks. They're saying banks like JP Morgan charge so much for data access, the kind needed for apps like Plaid to work, that JP Morgan's fees alone make up over 75% of Plaid's entire U.S. revenue.
Wow. So that highlights a real conflict, doesn't it, between innovation, letting consumers use these cool new apps, and maybe fair market competition.
Exactly. It's a constant balancing act.
So from AI writing investment memos and designing cards to completely new ways stablecoins might be regulated and this ongoing push-pull over data, the financial world is definitely not standing still. Lots of opportunities, but also clearly some significant hurdles.
Which really leaves us with a key question for you, the listener. As all these changes keep happening, and they're all interconnected, right? How is this ultimately going to redefine trust, access, and ultimately control in your own financial life? Definitely something to think about.
Spoken Tech for your ears.